Good morning, everybody. Today is Tuesday, August 20th, 8:45 a.m., and we are here once again on the Market Open. Folks, we got a lot to talk about today, like a lot to discuss. I mean, we had Palo Alto earnings yesterday. We have Canada inflation. We got some breaking news from Apple. We've got the stock market being at its largest win streak since 2003 at an 8-day win streak for the S&P 500. We'll talk about the implications of what happened yesterday, where stocks ended yesterday, what's going on in the pre-market. And then we've got a ton of macro things that obviously are happening in regards to JPOW speaking later this week, and a new tax plan that was officially unveiled by Kamala Harris. And definitely a lot of chatter over the past 24 hours about that tax plan. So we have a lot to discuss and get into. Thank you, everybody, for being here today. Torben, Ray, P-Nick, Bay Ray, Chris, Sanjay, Katie, Chris Amas, Adon. Thank you all for being here. I was definitely not late, dude. I started at 8:45. I'm telling you, it's the StreamYard delay. Like I'm convinced it's the StreamYard delay. Philip, good morning. Cody, Chris, Josh, David, Henry, Broccoli, Bob. What's up? Thank you, everybody, for being here today. Leza, Silvers, Rob, Josh, Poofy. We've got a ton to discuss right now. Honestly, we have so much to discuss that it's like, I don't even know where to start, dude. It's like, it's a lot to discuss. I think we'll start off with just looking at some of the pre-market stocks. We'll look at what's happening in the pre-market based upon what happened yesterday, because yesterday was a pretty historic day. And then we'll go into Palo Alto, because I think that is going to have big implications for the cybersecurity sector. Bay Ray says you should start the stream with saying, "I'm late, everybody." That's actually kind of funny, dude. Like on the days I started at 8:50, it shouldn't be "hello, everybody." It should be "I'm late, everybody." That's actually not a bad idea. Start with Gary Gensler. We'll talk about that. We will talk about that when we get to the Kamala discussion here today. All right, so let's look at what's going on in the pre-market. Pre-market is fantastic, folks. I mean, we got some really good results going on. Palantir at 32.55. You got NVIDIA that's down a little bit, but NVIDIA closed yesterday at 130. We'll talk more about NVIDIA. Robinhood, $20.48 in the pre-market, probably being helped a little bit by Bitcoin right now, as Bitcoin woke up yesterday and decided to join the party. 60,761. Bitcoin was at 61,000, I think, earlier this morning. And now it's at 60,742, up from 58,000, which is good. Why is this happening? Well, it looks like rate cuts are becoming more of an inevitability, which is going to unlock liquidity, but it's going to be good for Bitcoin. ELF is up 1%. Google is up 0.5%. You got ASPN, this one that went crazy last week. This is up 4%. Clover Health is up another 0.5%. Shopify breaking above $75. AMD is at 157, up 2% after acquiring a company for $4.9 billion. Lisa Su was on CNBC yesterday and pretty much explained why she's doing it, why it matters. And the market is pretty much buying into her argument for why she's basically acquiring a pseudo SMCI internally within AMD. Robinhood right now, $20.45. S&P 500 slightly down, basically flat, 0.01% down. 559.61 is where we ended yesterday on the S&P 500. So I think we'll start with that. Let's start with that and discuss what happened yesterday. PayPal's at $70.15. That's great. I mean, dude, you know it's a bull market if PayPal is starting to participate. So PayPal right here at $70, not bad at all for PayPal. All right, so let's talk about the macro. Yesterday was one of the best days in the stock market all year, and that is because it completed the 8th day of consecutive gains for the S&P 500. Today, if we end green on the S&P, we are going to be 9 days in a row, which I think has only happened 12 times in history. Yesterday, 8 days in a row ended up being the 54th time in history that this has happened. So, you know, you don't tend to see this stuff in a bear market. A lot of the bears are still thinking that the Japan carry-in trade is going to cause the markets to collapse or some type of macro data. I don't know, dude. Yeah, I don't think you see the S&P go up 8 days in a row and really create the types of gains that are justified in the context of the earnings growth that we're seeing. We saw that with Palo Alto. We'll talk about them in a bit. And are still below their all-time high. So the S&P 500 is now 2% away from its all-time high. Maybe we crack that over the next couple of days, but it has been a gradual step up from the August 5th lows at 507 back up to here at 559. Again, only the 54th time in history this has happened since 1954. Along with that, you've got the NASDAQ doing pretty damn well. QQQ right here is basically flat in the pre-markets. It was up 1.31% yesterday. It's at 481. It hit 482 at one point. 500 is the top for the NASDAQ. Again, doesn't seem that far away. And although it doesn't seem that far away, I know a lot of people are thinking, well, something could happen in between trying to break all-time highs and where the indices are right now. That is very fair. The only problem is the entire market is shifting to thinking that we are legit in a bull market. IWM right here flat as well in the pre-markets, but it's at 215, up 1.22%. What I mean by that is let's take a look at what some of the Wall Street firms are saying. So this is what JP Morgan said today. They said on their desk, today is setting up like yesterday, a slow grind higher on light volume, and then presumably systematic flows push markets materially higher into the bell to take advantage of more liquidity. About 1/3 of the S&P and NASDAQ gains came yesterday in the last 10 minutes of trading, which is correct. In the last 10 minutes of trading, we saw NVIDIA go from 128 to 130. And I was like, oh, we got 5 minutes left. We're probably not going to see NVIDIA close at 130. And then boom, NVIDIA just says, you know what? We're going to close at 130. It does feel systematically shares are starting to get bought in forget power hour in the last 10 minutes of power hour in order to push equities higher. Now, again, a lot of that money that's coming in, a lot of that liquidity is coming in. It's coming in off of rumors that we are probably going to get a rate cut. Well, what was the biggest rumor we saw yesterday? Evercore reported, hey, we believe, or we have good intention to believe, that there is going to be a 50 basis point rate cut on the table when Jay Powell talks on the Jackson Hole meeting, which I'll be streaming on, I think it's on Friday. So Evercore reported Powell's going to communicate that the Fed is open to 50 bips of a rate cut. I don't know who Evercore talked to, what insiders they have in the Fed, what sources they know. But if they're thinking that Powell is going to be very open to this is why you're seeing a green market right now, because if we're getting a rate cut and we are getting way better macro data than expected in terms of unemployment data, and CPI is below 3%, I mean, it just goes to show you that we are probably going to have and probably going to be in a broader market. Now, that doesn't mean we can't sell the news. That doesn't mean things can't fall back down. That doesn't mean we can't retest some lows. But it just means momentum, at least so far, based on all the data I'm looking at, is on the side of the broader market. Also, history is on the side of the Fed meeting. Outside of 2022, stock market S&P tends to go up about 1% after Jay Powell speaks, or within that 2-week period of leading up to Jackson Hole. So based on what happens on Friday, we will see what Jay Powell ends up saying and how the market reacts to it. But if he's going to say that it's time for us to cut, and he's going to be excited about us to cut, then maybe that's going to be a good thing for the broader markets. Now, here's another chart I want to show you, and then we'll get more into Palo Alto and see what's going on. So retail investor flows, people like you and people like I. This is what we got going on. Retail investor inflows into U.S. stocks jumped over the last 2 weeks to their highest levels in the last 12 months. This is really good for Robinhood, by the way. Aggregate net retail 5-day moving average purchases have more than doubled in a month and hit 1.7 billion last week. And I believe JP Morgan reported that same number at 1.8 billion. For 1.3 of that billion going to Microsoft, NVIDIA, Tesla, and Palantir. This comes after the S&P 500 fell 7%, providing a massive buying opportunity, or what looked like a buying opportunity. Following the inflows, the S&P 500 has surged over 8% from its low and is now 1.5% away from an all-time high. This is in the red right here on the chart is aggregate net retail purchases, and then the blue is the S&P 500. As you can see, right there in the beginning of August, when the S&P went down, the blue line, the red line went up. And that was people like you and I buying the dip and putting a ton of money into our brokerages, $500 million in one day into Robinhood as one of those brokerages to buy that dip. So whether it was retail that just felt it was a stupid reason for stocks to come down, whether it was a natural hunch of buying the dip, or whether it was a ill-informed move, it ended up being a good move for now, but it was an ill-informed move and retail just, piled in. So far it's worked. And thankfully, there have been many catalysts, including labor data, Japan backing off from raising rates, that led to that dip opportunity to be a good dip. And also, the logical, rational reason why it made sense to buy the dip is because the VIX went to 65. We've talked about that for the past 2 weeks. When the VIX goes that high, the S&P tends to bottom. It has happened many times in history. This time was really no different outside of the Japan carry-in trade unwinding. And it ended up creating a flash crash. You know what's really interesting too? Like we see, but yesterday Palantir hit 33.17 after hours, but it was like for 2 seconds, right? It was like one of those things. You could even call it a glitch to an extent. It almost feels like August 5th was a flash crash that was a glitch that lasted for a couple of hours, like in terms of like the real pain. And if you took advantage of that flash crash, that dip, then you had a massive opportunity. But usually, like if it like Palo Alto Networks yesterday fell 6% right before they reported earnings, or right when they reported earnings. And sometimes you just can't, you're not quick enough to get that dip. You need like at least 10, 15 minutes, not 10, 15 seconds. Seems like August 5th was our 10, 15 minutes. And if you got into the markets, you ended up not doing too bad. So in a secular bull market that's probably going to last for a couple years, with the thematic of AI leading the market along with rate cuts on the way, it did seem like that was a good buying opportunity. And that's what people ended up taking advantage of. And if you did, you've done pretty well. So we'll talk more about some macro stuff, but in the broad context of the macro, I expect today to be decent. I mean, I also expect today to be a little bit of a sell-off because, I mean, yesterday was just phenomenal. So you would imagine people take some profits, but going into Jackson Hole, I don't know if people need to take profits. Maybe they take profits on Friday, kind of a sell the news Jackson Hole event. The broader trend seems to be in place that the market is doing okay. Even SoFi, dude, up 7% yesterday, up about 0.5% right now in the pre-market. SoFi had a great day. And the reason for that is because rate cuts are going to create liquidity. Liquidity is going to be good for a company like SoFi. And it's going to be good for a lot of companies that exist in the broader stock market. Palantir at 32.50. We also closed above 32.50. There's that 33.11 wick right there. That was after hours if you saw it. But again, I kind of felt like a glitch because it disappeared quickly. 32.50 on a Palantir close was great, dude. Like closing above 32.50 is not easy. And I know we didn't get 33. Maybe today we tried for 33, but the fact that we're holding 30s, it has been almost a week now holding $30 is just incredible. It is just incredible. And let's see, where the catalysts lie to be able to hopefully get into that $35 range by the end of the year. But rate cuts definitely are probably going to help Palantir versus not help Palantir. Stocks intake says, I regret selling every day. So that's one thing I would just say to protect yourself against that mindset, because it can get very toxic if you take profits. At the end of the day, you got to take profits. Put in the chat if you've been taking profits. Put in the chat if you've been taking profits, at least some profits. Put in the chat if you've actually been taking profits. I'm curious because like at the end of the day, like obviously it's important to like take some profits, and the question is, what are you long on, right? So in my opinion, for long Palantir, it's totally fine to take profits on that, but it's just something that's, it's something that's in such a good upward trend. It's harder to like justify taking the profits. But if you're in options, you got to take profits. If you're in Eli Lilly and you got it at 600, you don't really care about Eli Lilly that much, or the future potential of it's at 900, you're up $300, take some profits. I don't think that's the worst thing in the world. I just think getting out of the market on August 5th and buying into the doomer headlines, that is what the media loves, right? Because they can attract your attention, they can manipulate you, and like all this stuff. That's probably that would be a mistake historically. And maybe you'll still be right if the market fully collapses and like, the August 5th was correct and this is a month-long dead cat bounce. But if not, then it's just important to not, fall into that trap. And I think that's the thing I'm proud of myself this time around, because if this was 3 years ago, I would have sold everything and been like a little sheep, scared as shit. And this time I saw the opportunity. I looked at these stocks, I looked at some of my options, and I was like, well, these are prices I got 8 months ago. Like, I believe in this thesis. I'm buying. And I think that's a mature mentality over time, because at the end of the day, markets tend to go up over the long run, especially if you're in companies that are executing. Trimmed about 15%, sold 2/3 of my Nvidia yesterday. Took no profits over the last 3 years. Dude, you must be doing great then if you took no profits over the last 3 years. I buy leaps on most companies I invest in and sell call options so I don't panic sell my shares. Yeah, and that's another good thing, right? If you're wheeling on it, then that helps you not have to sell as well. Overall, at the end of the day, I wouldn't like go super sad if I sold some stuff, or like if you took some profits and things start going up. But I would, try to have a very realistic macro expectation of what's going on, which is why, that's one of the things I really like about the show. I think we look at a lot of data, try to compress all that data. We look at a company like Palo Alto Networks, and we try to say, all right, like if Palo Alto collapsed yesterday, that's why when it was falling 6%, I was really upset, because I was like, we had such a good bull market. This is a very important company. You don't want to see one sector of a bull market like cybersecurity, which theoretically is one of the most important sectors, start to take a crap. Like that's not good, right? And so we really analyze, deep dive, and go into a lot of different things. We've talked about the bear cases plenty of times with Max 7, with the consumer demand and all that stuff. But at the end of the day, I think the good kind of outweighs the bad. And that's why we're getting a little bit more momentum. All right, let's quickly do Palo Alto and see how they've been improving. Then we got to talk about Kamala Harris and her tax plan. And I want to talk about the economic implications of that tax plan as well. So let me just play this one clip from Palo Alto Network CEO yesterday on CNBC in terms of about the earnings, and then we'll get into the results. And we'll talk a little bit about cybersecurity and why it seems like everyone, to an extent, should have some of this, not just Palo Alto, but cybersecurity in their portfolio.
A couple of quarters ago, you introduced a concept called platformization. Immediately, the wags told me that was just a cover-up. He doesn't really have anything. He's just trying to snow you, Jim. In fact, don't we all wish that you had done platformization a lot earlier?
Jim, I'm glad you're able to say that word without a hiccup, because we're trying to get it in everybody's lexicon. Look, this is going to be how we're going to achieve our target of getting to $15 billion as the first pure play cybersecurity company. And
talk about that ambition, dude. He wants to get to 15 billion per year. I think they guided for about 9 billion yesterday. I mean, it definitely feels like he thinks the TAM is open for cybersecurity, and Palo Alto is going to be a big player in it.
I have to say, as I said, I wish I'd done it earlier. One of my not older, but one of my prior bosses said to me, I wish I had executed my good ideas faster. So I feel the same way. I wish I'd done it earlier. Really excited by the pace of platformization, excited by the conversations we're having, and excited by the deals we delivered this quarter.
Well, it seems like we had been talking about the idea that it was hard to show a return on investment on something, particularly because like it's cybersecurity, you don't want to have to shut everybody down. But the fact was that you were able to demonstrate more, let's say, a better use of a company's capital with platformization than just buying one product and stringing it up with others.
Well, I think, Jim, it's funny, like all of us have seen this happen. Like, when Salesforce was born or Oracle Financials, we took a bunch of disparate systems and we put them together and called it the sales CRM platform or the supply chain platform. Now it's time for a cybersecurity platform. Now, I will tell you one thing. It doesn't matter whose platform you buy. You can't go back. You can't go back to point solutions and start stitching them. It's like a one-way street. Once you come this way, there's no going back. So our incentive is when we have the technological advantage, the platform, we got to get ahead of this. We got to move fast. We got to get our customers onboarded with this, which allows us to win the long-term game.
Okay, so the reason I want to show that is because it really does feel like cybersecurity is not going anywhere, and his ambitions are only getting bigger and bigger. So this is their earnings in a nutshell. Beat revenue estimates by 1%, beat their guide by 1.4%, beat billings by 1.4%, beat on the EPS estimate by about 6 cents. Revenue was 2.19 billion. Billings was 3.5 billion. They increased their remaining performance obligations by 20%. And the rest of the sort of numbers are not horrible. 3-year revenue CAGR of 21.5% off of a big base. That is not bad. Now, CrowdStrike is closer to 30%, which is why they get the premium, even though they're not as big as Palo Alto. And we'll see what they say on their earnings. But still, CAGR at 21.5% is not horrible at all with 2.6 billion in cash. It seems like AI is going to create a demand for energy, and AI on the malign side of things with bad actors is going to make it easier for them to try to hack into an enterprise, which is why cybersecurity is going to be more in demand because of AI. This is why it seems like Wiz, the startup that got offered $23 billion by Google, basically told Google to take a hike because they're going to try to go public because they feel that they can do $1 billion in ARR versus 500 million in ARR. Wiz only does cloud security. Palo Alto does $700 million in ARR in cloud security, which is what Wiz was going to get paid $23 billion to get acquired for. And that's just one segment of their entire business. So it is very, very exciting in the context of what's going on with Palo Alto. And it also feels that Palo Alto is not stopping in regards to the momentum around attacking the broader cybersecurity sector. Now, I think this has implications for CrowdStrike. I kind of have been under the assumption, my prediction has been CrowdStrike's going to miss and lower guidance. Now I kind of feel like that, maybe the whole Y2K event wasn't that big of a deal, which was my initial intuition in the beginning, but then you see all these headlines. Now it kind of feels like, hey, maybe they might guide higher, even if they miss earnings this time. Or they're going to beat earnings and guide a little lower, but it's not going to be enough for the street to be upset. And if that's the case, then it seems like cybersecurity probably is going to be a sector that's in demand. And that's a good thing. We want to see companies in every industry, whether it's AI, cybersecurity, et cetera, in a bull market participate in maintaining momentum. Again, like for the people that are saying this is a bear market, you shouldn't be seeing Palo Alto raise their guidance on EPS by 6 cents, beat their current EPS by 4 or 5 cents, and then raise their billings obligations and their revenue projections for the next fiscal year. Like, you're just not supposed to see that stuff happen, but it is happening. And so I think it's just hard to point to a lot of those arguments that are bearish. One stat here from Fundstrat, our boy Tom Lee, gave us the follow yesterday on Twitter. So shout out to Tom Lee. Hopefully we get him on the show soon. He says, of the 465 companies that reported from the S&P 500 so far, 81% have beat estimates by a median of 5%. The 19% that missed, they only missed by 5%. Palo Alto yesterday had good earnings, so we would put them in that category of 81% that beat estimates. It's not bad, dude. It's not bad. And it's some of this stuff you're looking at that probably tells you maybe we're not in the most bearish of bearish markets, given what's going on right now. Amit, your shirt looks like a crop top where the bottom half is close enough to flesh colored. Okay, interesting. The comments you guys have some of these comments are amazing. Bay Ray says, Amit, is that your dad? That's racist. It's funny. It's definitely racist, but it is funny. Someone says, my boyfriend told me he bought crowd on the crash and I called him a knife catcher and he died laughing. Wait, that's so funny. Did you just learn that term knife catcher, or did you have you been using it for a while? Because that's so hilarious, dude. Like if I have a girlfriend who knows nothing about the stock market and I buy a stock and she's like, oh, you've caught the knife, I'd be like, what did you say? Where did you learn that from? Where did you? It's like when a newborn says something for the first time, like when they curse for the first time, and you're like, okay, you've been listening to dad too much saying some stuff. If my girl ever said some stock terminology, I'd be like, what? Who are you listening to, dude? You better be listening to me on these live streams. Where are you getting this from? Okay, let's talk Tesla real quick because we have some quick piece of news. Then we'll get into Kamala and the tax bill. So 2 bullish pieces of news on Tesla. Number 1, Tesla China insured 14,000 cars last week. August is on track to be a record month. I think 2 weeks ago, we also had record numbers in China, or maybe it was last week. So they've been doing a really good job in China with the insurance registrations, and that's overall, just bullish for deliveries. And then here's the big piece of news this morning in the context of Tesla. So Europe is considering giving Tesla a little bit of a break. So the EU is proposing to put a tax of 9% on imported Tesla vehicles from China into the EU, down from 20.8%. So that's a decline from 21% to 9%. This should just make it easier for Tesla to be able to sell into Europe. It should be able to increase deliveries. It should be able to help to some extent with gross margins. I'm not sure exactly how much it would help, but it should have some effect. And it should make cars theoretically cheaper in Europe if you want to buy a Tesla, because the tax that is the tariff that's imposed on them and then ultimately applied to the consumer is not going to be as large. So this is not too bad. And then another piece of news here is that OEMs not cooperating with EU authorities will have tariffs set at 36.3%. This is not final yet. It's not news yet that is like officially true, but that's just something that's being talked about. And if that's the case, I think that's definitely very bullish for Tesla. And I also think that's going to be bullish for broader EV adoption, which is, we saw the Europe registrations in May. It was at a 4-year low. Like it's the lowest it's been since March of 2020 in terms of EV adoption. European EV registrations, which correlates to EV adoption. So, it's definitely an EV winter for Europe for sure. And Elon has said it feels like an EV winter across the entire world, which is why they're focusing more on rides versus deliveries. But hedging back against that with more deliveries is not a bad thing. Now, final thing I'll say on Tesla right here is that I think Tesla, and we'll talk about it with Jason today on Technical Tuesday on the market open or market close. He'll be there to break down. Last week he bought $240 call options, I think expiring in September. So those options are already up for him like 170%, but he feels that Tesla's in a bullish uptrend. I said, hey, if Tesla really tests 270, which was the local top before the 1010 event, and then rate cuts take it to 300, it would be one of the most epic stories of this year, given everything that Tesla shareholders have had to go through. And this is what 1010 needs to have in terms of an impact, in my opinion. Number 1, you need a specific timeline on robotaxi rollout. If you just say, hey, it's coming, but you don't say when it's coming, I don't think the street's going to be happy. Number 2, you need to say FSD is perfect. You need to say version 13 or 12.9. I think they're on 12.5 right now, is literally perfect, and that we should be, ready for it to take you from A to B without getting into a crash. Number 3, you need to have an announcement of first cities. It's in San Francisco, Austin, Nevada, like Vegas. Where is it? Where are you going to put this into action? Because you're probably going to need 3 or 4 cities before you even scale to like the Dubais and the Germanys of the world and dealing with all the regulatory hurdles of that. So I would want an announcement of cities. And then finally, I would want Elon to get on stage and basically continue to shift the narrative from volumes of deliveries to rides, and making that a key metric for analysts to track in 2025. If these 4 things happen, the most important part being the specifics of the details of when the heck the Cybercab officially rolls out, even if it's June 2025, at least if we have that definitive date to look forward to, I think Tesla can get some momentum on that. And I don't think it has to be a sell the news event. But if that's not the case, and it's just going to be one of those events where they just show off the car, but like it doesn't really have any specifics on the timeline. The car is just, relatively a cool idea, but it's not anything unique. Then I think it's going to be a tough situation. So I think Elon really needs to like explain what or how this is going to play out. And if not, I don't think the market's really going to respect it. But we will see. And 10-10, we will see, what ends up happening with this robotaxi event. Danielle says, I've attempted to test drive a Tesla in my area twice. The wait times are quite long. Surprisingly, I guess EV demand isn't dead. Yeah, I wouldn't say it's dead, but if you go through the Q2 earnings from Tesla themselves, they are saying we are seeing a significant shift to hybrids. And that I can definitely confirm. There are lots of people buying hybrids. I mean, we went to a car dealer a couple months ago with my dad. And like, when we asked him about hybrids, he was like, the dude was like, dude, hybrids are like, everyone comes in and they want a hybrid. So hybrid, and Tesla confirmed that as well. The question simply becomes, will the transition to rides over deliveries be enough in the next year to get this sucker to go back to 350, 400? And I think energy is growing. That'll be good. Robotics is kind of a call option. It's got to be FSD. It's time for FSD. And hopefully FSD soon enough becomes real. Okay, let's talk about Kamala Harris. Now, I am not here to be political. I do not care about who you vote for. I am just looking at the economic policies of Kamala Harris, and we are going to talk about what those mean. So Kamala has started to trail in the polls. Yesterday was the first night of the DNC. I didn't really watch too much of it. I saw some clips here and there. And the reason for why she's trailing in the polls now, after having a 2-week lead, she had a pretty strong lead if you look at Polymarket, and you use that as a source for the poll odds. She's starting to lose in the polls slightly because she's proposing some economic policies. And yesterday was the next policy she proposed that has not really been a fan of at least the investor community, to say the least. Corporate tax rate, 28%, up from 21%. So Trump came in, he took it down to 21% in 2018. It's been that way for 6 years. We have not raised corporate taxes in the past 40 years. It's only been a perpetual decrease. Trump exacerbated that decrease to 21%. I think now he wants to do 15%. Kamala said, you know what? If I get elected, we're going to raise that tax rate to 28%. So this is in addition to a couple of policies that we've got. Giving $25,000 to first-time home buyers, floating the idea of price caps on groceries, and allegedly considering Gary Gensler to be the U.S. Treasury Secretary. Now, some people have said this is fake news. This is not real. Some mainstream outlets have reported that this is true. I don't know if this is true. I will comment that Gary Gensler, as U.S. Treasury Secretary, he would be replacing Janet Yellen. The dude hates crypto. So if you like crypto and Gary Gensler is in charge of the entire treasury of the United States of America, it's going to be very hard to have some beautiful strategic Bitcoin reserve. Like that fantasy is gone if Gary Gensler gets that type of opportunity. So that is, that is Kamala implicitly telling crypto people she does not care about you, because Gary Gensler is the most anti-crypto SEC commissioner we've ever had. And, the crypto community is not fond of him. But if that is, not true, then we'll see who she nominates. That would not be the best idea in the context of crypto. So you have $25,000 for home buyers. You have price caps on groceries. And now you have a 28% tax rate on corporate news or on corporations. Now, let's look at some data, right? Because we can all talk poetically about the political philosophies of tax gains and tax losses in terms of increasing it or not. Here is the actual data. We showed this chart on the Sunday show. I think this is going to be important to show again. This is what happened in the United States of America for the biggest companies in the world when we had tax cuts for the Trump tax cuts. So the effective tax rate, for example, from 2013 to 2016 was 21%. Now, I think theoretically it was posed at like 34%, but corporations, they have a lot of loopholes. So the effective tax rate always goes a little bit lower, even though if you look at some of these companies, they're not paying, 21%. They're paying like Target was paying 34% corporate tax rates. So corporations definitely were paying a bit more than they were paying in 2018 to 2021. In 2018 to 2021, they were paying almost half less. I mean, look at FedEx. FedEx went from 18% to 1%. Meta went from 28% to 18%. Remember, Meta's profits, those gross margins are juicy because it's a tech company. So every dollar they save in taxes, it helps go to the bottom line. And you get, 50, 60 cents of that as profits. That's not a bad thing. So Verizon saved 10 billion, Walmart saved 9 billion, AT&T saved 8 billion, Meta 8 billion, Intel 7 billion, Comcast 6 billion, Disney 6 billion, Visa 5 billion, Lockheed Martin 5 billion, Capital One 5 billion, et cetera, et cetera. The list goes on. Companies saved a lot of money. So now there's two theories here. I'm going to give you the theory that's good about this and the theory that's bad about this. And this is just my perspective trying to analyze how we should think about corporate tax rates and what it means when we kind of analyze it. The bullish case for lowering taxes is that companies will have more money to spend on R&D, will have more money to spend on people that are unemployed, right? So they'll be able to hire more people. They will have more money to give back to shareholders via dividends and share buybacks. And in general, they will have more money theoretically to lower prices on products because their margins are stronger since they don't have to pay that much in taxes. All of those things you could theoretically argue were the reason we saw the stock market boom from 2017 to 2020 during the Trump presidency, because corporations had more money and they were able to do more things for shareholders, investors, customers, etc. It trickled down. Yes, this is called trickle down economics, essentially. And the stock market went up. Some people were saying, well, a lot of corporations kind of hid that money and they didn't really do that much. I agree with you. I'm not saying corporations are the most ethical, deities in the world. And they, obviously things have happened that were bad and went against, the law, found illegal backsheds to hide the money. However, one thing that I think is very important, if your stock bought back a ton of stock. So let's say, I'm just putting it a hypothetical example. Google bought 50 billion worth of stock because instead of paying an extra 20 billion to the government, they bought it in stock. And you sold your Google, well, you paid capital gains tax. And so even if corporations are hiding some money, there is an argument to say that as corporations buy back their stock, which is real money, instead of that 20 billion going to the government, it's going back into buying Google shares. And you have Google and your stock goes from 85 to 130 and you sell it, whether it's short-term or long-term, you have to pay a capital gains tax. So there is a way to collect the gains of that money from Google, even if it doesn't go to the government. It just ends up getting paid by shareholders. So the question is, philosophically, do you want shareholders to pay that capital gains tax, which also includes CEOs, executives, right, insiders in the company, not just retail or institutional investors? Or do you want Google themselves, the company, before they distribute everything back to shareholders, to pay back that money to the government? So I think that's the sort of philosophical debate that's going on right here as well. Now, the bull case for taxing corporations, and there is one bull case that I think is harder to argue against, at least not now, but in the future. So the one bull case is that if you have a corporate tax, you'll be able to fund different initiatives because maybe Kamala will be able to fund this $25,000 home buyer thing if she has a corporate tax. So maybe that. So the one argument that is there is that, hey, if we tax corporations, we can get that extra money and we can redistribute it in another way. Now, the downside of that, obviously, is that if corporations raise their prices, that could be inflationary. If corporations just take more money and put it into Ireland and get a tax shelter, that could be bad for collecting tax revenue. It could be firing more employees. There's a variety of things that can happen that could be bad for overall growth. Here's the only argument that was convincing to me. AI. So Chris and I talked about this on Sunday. If NVIDIA starts generating, again, I'm just being hyperbolic here, a couple $1 trillion in revenue a year because all of the value is accruing to them and automation is happening at scale, people are not going to have jobs. And I don't think the government is going to let NVIDIA have, $10 trillion a year in revenue and, a couple $100 billion in net income. And you've got millions of people unemployed at some level. And this is the sort of thesis that we need a universal basic income, because basic jobs are going to be washed away unless that's doomerism and AI actually creates more jobs. There's two sort of schools of thought there. But if AI does end up replacing a lot of jobs, you're going to have people that are going to need money. And the only way I would imagine to get that money, if you're not creating a good or service to be able to create the value, creation that allows that money to exist, is taxes. And so I don't know how this is going to play out. I do think that is about 10 years from now in terms of having to raise taxes dramatically to be able to pay for some of these things. But that is one thing I would think about. In general, it seems like most people in the investor community were not happy with this tax bill that Kamala proposed. And so if, we are all a little bit in a bubble. I will say we are all investors. We all generally, I would say 95% of people in the chat do not agree with corporate taxes going to 28%. Why? Because we own a shit ton of corporations and we want them giving the money to us, not to the government. However, and I think it's very important to make this point, 99% of the people in America don't invest. They see Amazon bring in $600 billion in revenue. And they're like, can't Amazon pay a couple more billion in taxes, right? It is that sort of simplistic thinking. And I say simplistic, not because it's bad thinking. I just think there's a lot of nuance to that type of train of thought that goes missed. And so Kamala's obviously appealing to a base of people that feel corporations have way too much money and it's not working for everyone. The question is going to be, are there enough people in the United States of America to reject that type of thinking and vote against those ideas? Or are there going to be a lot of people that want $10,000 off of their student loans that we still haven't got from President Biden that he promised and end up voting for the free money? We'll find out. We will find out. But that is what's going on right now in the context of corporate taxes. And we're going to see, how the broader market ends up dealing with it. Someone says, that's my perspective amid AI long-term will replace us. We need corporate taxes to subsidize peasants like us. And look, I think that is a theory that is possible. I do think that theory is far away. I don't think in the next 5 years during Kamala's potential administration, people are, out of a job in droves. I think we're seeing some automation right now, but even like humanoid robotics, that's going to replace probably a couple million people. That's not happening like in the next couple of years. You're going to see pilots of that start to happen. You're going to see the scaling of that, but it's not like the 500,000 people that work at Amazon warehouses are going to be replaced with a humanoid robotic by 2030. Like, I don't think that's happening. I think maybe by 2040 that happens. I think we'll see the beginning of that start to happen, but it's not fully happening. And so the question is going to be, how are we going to deal with that? What job is that person going to do? How is the government going to subsidize them? And will Amazon, who's going to make a lot more of a margin on that robot versus that employee, end up paying a tax to the government to be able to subsidize that employee? Or will there be so much growth from Amazon that they'll hire so many more people? Like Trump's idea is, hey, Amazon will have so much growth because they're going to replace humans that they're going to hire more people to do other stuff. And therefore, that growth is going to unlock more value. Kamala's argument is, well, Amazon's going to be greedy. They're going to keep the money. They're not going to hire more people. And then that money is going to go to shit. And that we need to take some money from Amazon via taxes. One of those routes is going to happen. And I think in this election cycle, we're going to see what the American public ultimately chooses for over the next 5 months. But those are hopefully two perspectives that are a bit more objective on this and hopefully not as biased on what's going to happen, how it's going to happen, and how Kamala and Trump are thinking of both of these things. Here is one perspective that is a bit more against Kamala. Let me play this right here. Here's an economist explaining why price controls might not be the smartest idea.
Vice President has rolled out taking a look at gouging and price controls when it comes to food companies. As the former CEO of Kellogg, what do you think of these policies?
Well, I thought we would have learned by now that price controls do not work. They actually have the opposing effect, which is that they create more inflation, they create shortages, they create a black market. Price gouging is a concept that is very hard to enforce. It almost relies on intimidation, on rhetoric, unless you're going to have an army of people auditing retail stores, auditing online retail. But it's just, it is just rhetoric. I don't believe that they will get price controls through. If they get gouging, maybe they can go out and jail some people who are selling umbrellas for $50 during a rain.
This part is kind of crazy. When he was talking about this morning, I was like, that is crazy, right? Because you have to enforce stuff. Like, you have to enforce things. I think Australia did this, if I'm not wrong. When they had a gun ban, they would like go to your home and like take your gun. So like, if you had a ban of price gouging, you would literally have to go into Walmarts and like literally check every price, right? Or like local mom and pop shops. And what do you do to get people to not price gouge? Do you use force? And if you do use force, I mean, how effective ultimately is that going to be?
Storm, but it is an abstract concept and very hard to enforce. And I think, if anything, it will create some intimidation that we shouldn't be raising prices, but it's not sound policy. And I'm just very surprised. It seems like they have momentum. Harris will. They have momentum. They've got polls on their side. They don't need this. They don't need to turn off people who perhaps were thinking about taking a second look at Harris. Now, I think a lot of people are just going to walk away. How many? I don't know. But conceptually, I can see that happening.
By going after populism instead of trying to be more middle of the road.
What if you can't help?
So again, that was the one perspective I want to show. The former CEO of Kellogg's obviously dealt with a company that has to deal with price controls, right? Because they're selling a lot of consumer goods. it's interesting. How would you ultimately enforce that? So Alex Richwright says right here, you can argue that companies are greedy and should be taxed more, but you could also say that the tax money will just go to an arguably larger, more corrupt, inefficient company called the U.S. government. Again, there's two different schools of thought here. Either you believe the government should be in control of the money, or you believe that Google should be in control of the money. Both, you could argue, are corrupt. I guess voters are going to decide in November which one is more corrupt, which one is not corrupt. I do agree here with the comment that Chris made here in the chat that this is a little bit more rhetoric, in my opinion. I think everyone can kind of agree at least on this idea. Like when Biden promised $10,000 of student loans forgiveness, it got a lot of people to vote for Joe Biden because he promised you $10,000. Now that was a dream, essentially. There was no way he was going to be able to unilaterally cancel $400 billion of student loan debt. He's been able to cancel student loan debt, but that's in the PLOF, the Public Loan Forgiveness Program. And that's like if you've been a teacher or a firefighter for 10 years, you get your student loans forgiven, which I think that's a good idea. Those people do not make tons and tons of money. The government supporting them after giving so much time to the state, I don't think that's a horrible idea at all. But average people just getting loans wiped away, that was never going to happen. So I think Kamala might be saying, hey, I'm going to give you $25,000. Hey, I'm going to go to Walmart and I'm going to make sure they don't increase prices. Hey, I'm going to, increase corporate taxes. That might be a little bit of placating to the crowd, which as a politician, it's smart to do. Trump does it as well, right? Both politicians are guilty of that. But the question is going to be, do enough Americans buy into that, or do some Americans get upset about that happening? And I don't know. We're going to have to see how it plays out, but it's going to be pretty interesting in the next 10 months, or the next 4 months. Dude, the election's in November, bro. It's like October. It's like 3 months away. In the next 3 months. I forgot the DNC was even happening yesterday. I forgot they do it at the end of August, but like the DNC was happening yesterday. We are getting pretty close to figuring out who's going to win and how this is going to end up playing out. But yeah, that was what happened yesterday for Kamala's policy. Let me know. I mean, who's a fan of it or not? I see some comments here. Some people are for it. Some people are against it. Let's do this. Put a 1 in the chat if you're for it. Put a 2 if you're against it. A 1 if you're for it. 2 if you're against it. We might as well just do a poll. Let me do a poll right here. I'm sure a lot of people are against it, but let's see what the split is here and see if it's a little emblematic of what we have going on in the United States. Again, we are more in the investor class. So a lot of us, are kind of against this idea, but there are more people not in the investor class that absolutely are happy with raising corporate tax rates. And in 3 months, dude, 3 months, we are going to figure out what happens. Couple headlines, and then we'll get into the market open. So Palo Alto Networks price target raised to $400 by Cantor Fitzgerald. Basically, they said, hey, their growth is good. They're probably going to reach $15 billion over the next 5 years in revenue. And so we're excited for them. Number 2, Canada inflation is now 2.5% year over year in July, which is really good. That matches the estimation. So we see inflation coming down all across the world, which is not bad. All right, 77% say no, 23% say yes. So it seems like most people aren't a fan of it. Apple headline will make its iPhone Pro and Max models in India for the first time this year. I don't know if that's all of the iPhone Pro and Max models. Probably not. It's probably like 2 or 3% of the overall models they're building, because the majority of them are in China. But India is going to catch a bid by Apple, and you're going to start to see some more production in Apple as well. And then here's one that I thought was really interesting. This chart that I saw this morning. Admit I spelled Kamala wrong. Okay, I'm sorry. I didn't mean to do that. I was just typing quickly. About 59,000 home purchase agreements were canceled in July, which equals to about 15.8%, 16% of homes that went under contract that month. This is the highest percentage of any July on any record. So basically, when you're getting into a home process, buying process, you sign an agreement, but then you have to sign a final agreement. I know this because when my parents bought a house, they went through lots and lots of meetings until you got to the final agreement. About 16% of those purchase agreements were canceled when it came to buying the home. This just goes to show, hey, J-Pal, like people are not buying the home. They're having cold feet at the end because they just don't feel like they can afford it with 6.5% mortgage rates. Now I think it's at 6%. It was at 7% earlier in July. And it looks like we need a rate cut to re-stimulate the housing market. Kamala wants to do $25,000 for buyers. Maybe a rate cut ends up not needing that much stimulus, but inevitably we're going to need to see the housing market do better. And the July data is definitely showing us that right now it's struggling. And so all the eyes will be on the market as J-Pal speaks on Friday to see if we're getting 25 or 50 bips. And whatever he says is going to implicate not only the housing market, but obviously the broader stock market as well. All right, here we go. Tuesday, August 20th, 9:30 a.m. The stock market is now open. Palantir 3253 opens slightly green on the day. 3255, 3258. All right, you got some momentum for Palantir. Robinhood, $20.42, opens up about 0.5% up, $20.43. Not bad for Robinhood. S&P is flat or down. QQQ basically flat and down. IWM flat and down. When I mean flat, it's down, like 10, 15 cents. But they do open red, which makes sense. But all three of those indices had a really good day yesterday. I would imagine some people are taking profits. And I wouldn't be surprised to see those go red. NVIDIA 128.4. That one's down 1.2%. NVIDIA literally ended yesterday at 130 on the dot. It was hilarious. It's like the market makers just wanted to get it to be at 130. So NVIDIA right there at 130 and now at 128, down about 1%. Fortinet is up a little bit. CrowdStrike up about 1%. Wow, CrowdStrike almost at 270. Dude, that's basically where it was a couple of days after the crash. It went down all the way to 192. So 270, not bad. Palo Alto Networks is up 4%. And they should be. They had a great quarter. Now, they probably are a little priced for perfection, so I wouldn't expect some massive, massive gain, but up 4%, good guidance. Palo Alto crushed it. So it makes sense that they're getting some momentum. SoFi down 1% on the day, 739. So SoFi is down. NVDL about 1.5%. That's leverage against NVIDIA. Google's up 0.36%. Elf Beauty up 0.5%. Coinbase up 2% because Bitcoin's up. Tesla. Does Tesla want 230? 226, up 2%. Again, if you're just joining, the news on Tesla with that was that the EU is thinking of taxing imports on Tesla in terms of tariffs at 9% versus 21% if they're coming in from China, which is going to be really good for deliveries, volumes, and affordability of those cars for consumers in the EU. So that's the news that I think Tesla's pumping on right now. And that's definitely bullish for Tesla. PayPal is back in the 70s. Look at that. $70.15 on PayPal. Not bad. PayPal at $70, not bad at all. So PayPal catching a little bit of momentum. S&P basically flat again on the day. Robinhood 2027 flat as well on the day. CrowdStrike again 270. Spotify 346. Starbucks back at 93. Man, puts on Starbucks have not played out so far. It has not gone even close to the levels it was at before they hired the Chipotle CEO. Still up $20 billion in market cap, went from $80 billion to about $105 billion. So Starbucks has done pretty well, and I guess the street is believing that the Chipotle guy is really going to turn around the business. Let's look at the Mag 7. We've got Microsoft up a little bit, Apple up a little bit, Meta's flat on the day, Google's up a little bit, Amazon's flat, Nvidia's flat, and then Tesla leading the way up 2.27%, now at 227.7, maybe running for that 230 level on Tesla right now. Yeah, we got PayPal at 70, CrowdStrike is up. Not bad. Bitcoin's back at 58,000. Really? Is it back there? Oh, no, it's still at 60,000. No, so Bitcoin's at 60,000. So Bitcoin's up from 58,000. This is another reason why markets are doing a little bit better in terms of the crypto proxies. 60,595. The update on Bitcoin, I saw something this morning that was interesting about Bitcoin, and it had to do with some larger. Oh, yeah, this is it. So 60% of the largest hedge funds have disclosed Bitcoin holdings. This is the chart right here. So the largest hedge funds in America, 60% of them have some exposure to Bitcoin ETFs, which is good. I mean, this is kind of what you want to see. And over time, you would imagine more and more of these hedge funds have more Bitcoin. This is the top 25 hedge funds in the United States have some level of Bitcoin ETF exposure. We know Goldman Sachs has $500 million of spot Bitcoin ETF exposure. That came out last week. You would imagine that continues to go higher. Again, the thing that Bitcoin needs is the rate cut to unlock more liquidity. Hopefully, that's going to be what happens for Bitcoin to get moving. And it tends to move, August and September. Q4 tends to be where Bitcoin really shines. But we'll see how that plays out over the next couple months. Robinhood, $20.25. CrowdStrike, $269. SoFi, $739. SoFi again was up 7% yesterday. Cisco's flat on the day. Tempest AI, the stock Kathy has been buying a lot of. This is up 3%. This is a healthcare AI play. She bought more of this stuff yesterday. $59.34. Haven't really gone through the financials. $9 billion market cap. Not fully sure of what the moat is of this company. But one of the standalone AI plays that is getting Kathy excited. Semiconductors are all down today except ASML, AMD, and ARM. Those three are up. The rest are down. Makes sense. They were all up yesterday. So today is going to be hard for the S&P to complete a ninth a day in a row of being green. That has only happened 12 times in history, and you're already seeing it right now at the open. Like, it's basically flat. You've got a lot of sellers that are combating the buyers that are getting in. Volume of 1.68 million. So it might be a little hard to see the S&P 500 get back to green after 8 days in a row of green. Palantir at 32.59. Palantir is green. Palantir is green, 32.57. Let me check resistance on Palantir. Again, 33 is not going to really be easy, but I think it's possible because we touched 32.90. We touched 32.7. Like, I think momentum is definitely there. The wall at 33, yeah, it's like 5,000 shares. There's a couple of little mini walls before it, but again, those walls are only a couple thousand shares. There's not like 50,000 shares waiting at 33 or 100,000 shares or anything like that. SoFi was very impressive yesterday, dude. SoFi had at 740, there was 200,000 shares waiting, and SoFi closed at 747. So, like, there was just a lot of sell side pressure every cent you went up on SoFi. But there was the volume to combat it. For Palantir, those walls don't exist. There's not like 200,000 shares waiting to be sold at a certain level. It just needs more volume. Volume is down. It's at 3 million right now during this time. Yesterday, it was at close to like 8 million, 8 million. So volume has died down a little bit over the past couple of days. Market cap right now, it's 72 billion. Price of sales of 29 and up about 0.09% on the day. Rocket Lab's down 2.6%. Okay, that makes sense. Rocket Lab has had a 30% run in the past couple of days. People are taking some profits. 696 for Rocket Lab. ASTS, is that one up? ASTS is down 4%. That makes sense. That's up like about 200% in the past week or something. So makes sense that that's taking a little bit of a breather. I think it's not crazy today to take a breather in the broader markets because yesterday and the past weeks have the past 2 weeks have been amazing. Look at Palo Alto up 6%. And again, this is the thing. You have good earnings in this economy, you're going to get rewarded. This is what happens in a bull market, dude. You have a good earnings, you get momentum. And so it's nice to see Palo Alto actually get that momentum as well. Where's Fubo? This thing was up 30%. 2 days ago. It's down 5%. Okay, so that one's taking a breather as well. PayPal still holding 70. PayPal still holding. They announced a partnership with Adyen today. ADYDN. I don't know exactly how to say their name, and that's another payments infrastructure company. Dude, I forgot where they're headquartered. I think they're in Amsterdam, but they announced some partnership with them today, and maybe the street really likes that, and that's why PayPal is gaining some momentum. Kava hit 100. I think it's because the CMG CEO left, which gives some room for Kava to grow. So your argument is maybe that the market likes Kava because they think they'll be more competitive with Chipotle because Chipotle will suffer because the CEO left. Not a horrible thesis. Kava, we looked at this yesterday on the market close. It's up 150% year to date. I mean, just an incredible story with Kava Group. It goes to show that tech was not the only sector that was winning this year. You just have to be a bit more selective to find some of those gems. Palantir still green, 32.55. S&P again, barely green. It's flat on the day. Really hard to get some more buy side pressure coming in. Robinhood at $20.14. Spotify again at $3.46. CrowdStrike $2.69. Fortinet at $75. All of the cybersecurity names getting some momentum because of Palo Alto. And Kava's great food. Yes, that's also true. I've never had it, but a lot of you guys told me in the chat Kava is good. DJT, we haven't looked at this one in a little bit. $22. So this one's down like 50%. I think this one will go up if Trump wins, but it'll be very short-lived. The reason it's down a lot over the past month, like 40%, as you can see right here, it went from 36-ish to 36 to 22, is because Trump's posting on Twitter again. And Trump was the only reason people were going to Truth Social, but if he's posting on Twitter, a lot of attention is on Twitter. So that's probably why this one's down. But I do think it catches a bid if Trump wins. I just don't know how long that lasts. DraftKings got upgraded to 50 and 44 by a couple firms today. They're at 34.75. Google at 169. Wow. Google coming back from 157 to 170 today, possibly. Google really showing that, the DOJ potentially canceling them. Or not canceling them, but basically canceling them. Yeah, breaking up the business is not going to be the worst thing for them. One thing Trump said yesterday as well about Tesla that I forgot to say, Trump said he might eliminate the $7,500 tax credit for electric vehicles. Now, he used his words very carefully. He said he might do it. Tesla right here at 224. He said it's not a very good thing to have this type of incentive, but he also mentioned that he would consider appointing Elon Musk, which is the Tesla CEO, as in an advisory role to one of the parts of his cabinet, which was very interesting to hear. And then Elon tweeted this, that he would love to be part of the Department of Government Efficiency. He said, I am willing to serve. Department of Government Efficiency, DOGE, also spells out Doge. So Elon's just memeing the crap out of all of this. Like Elon's really having fun with it. Like this is just insane. But Trump did say, hey, I kind of don't like the $7,500 credit. And I kind of don't think we need it. Now, I think he's saying this to, just like Kamala's appealing to her base, I think Trump's appealing to his base of people that really don't like EVs or care about EVs or feel like EVs are being forced on people. And he's saying, hey, we'll get rid of it. And then when he gets into office, Elon and him, they're going to have a conversation and Elon's probably going to convince him to not get rid of it. Or maybe Elon thinks you should get rid of it because it's going to help Tesla. I think Elon would not be supporting Trump unless he thought there was some plan to navigate. The point is Elon wants control, and Elon has not had control for the past 4 years because the Biden administration has given him the cold shoulder. And I think if he gets some control, that's what he's going to be happy about. I mean, dude, being offered a cabinet position, can you be a CEO and still have a cabinet position? Is that a thing? Because like from my understanding, some of these cabinet positions, they're like full-time jobs. They're not like, like the Department of Energy or the Secretary of State. You can't be a CEO. Now, granted, if it's an advisory role, I'm pretty sure you could be a CEO. But if it's a legit cabinet role, I'm not sure if that's the easiest thing in the world. Nonetheless, it does seem like Trump and Elon are definitely getting along. Tesla 224. So Tesla selling off a little bit. Palantir's still going green, even though the market's selling off a bit. But Palantir's okay. Nvidia 128 down 1%. Palo Alto 364. That's up 6% on the day. SoFi gaining some of their momentum back at 742. They were at 738. Robinhood at $20.13. CrowdStrike at 269. DJT at 22.31. Where's Amazon on the day? Oh, by the way, Jeff Bezos wants to buy the Boston Celtics, which is why he sold or is in the process of selling $5 billion of Amazon stock because the Celtics are apparently worth $6 billion. I would be pretty annoyed if I was a big Amazon shareholder that the reason this thing cannot break 200 is because Bezos wants to buy a sports team. That's not interesting to me at all. Now, granted, I'm not a multi-hundred billionaire, and Bezos is probably bored of watching his Amazon stock go up, and he wants to have fun in Boston, I guess. So that is one of the reasons why Amazon stock has taken a little bit of a hit. And it seems like the New York Post reported it. Some other sources reported it. It seems like he really does want to buy the Celtics. Just billionaire things. That's kind of what you do when you're that rich. But that's not the best for Amazon shareholders. So I think Amazon will be fine long term, but that seems to be the reason why it's been stuck, along with macro concerns. But Bezos selling has not been, helping the stock. Every time it reaches any level of momentum, you get a big sell by Bezos. Palantir 32.71, getting a little bit of room to run. Again, there's really no resistance on Palantir at all. Not that I'm looking at on the order flow. So if it wants to run, I don't think anything's stopping it from hitting 33. But the volume needs to come in. Admit when you have hundreds of billions, you'll understand. Yes, I agree. The thing is, if I have hundreds of billions, dude, I would keep trading stocks all day, dude. Could you imagine like $1 billion just playing with it in your Robinhood account? Bro, like I don't need to buy a basketball team. I would legit dude, the amount of degenerate options, because if I lose if I lose 30 million, it's like, I got 970 more million. It's not dude, if you gave me $1 billion in a Robinhood account, I would have the most fun ever, dude. I would never be off my phone. It would be the most fun ever. Celsius, where's Celsius? Palantir now getting rejected at 32.70. Celsius, $40.83, down 1.6%. Cruise lines today are down a little bit, down about 1.38%. S&P now green, 559.9. Again, S&P top is 560. Here's the chart on the year-to-date. S&P top 565. There is the V. There's the downward spiral to 507. Then there's the V shape back to 560. By the way, I don't know if you guys saw this last night. Dan Ives, I talked about this the past couple of days ago. I said, hey, I want to see when Dan Niles and Meet Kevin become bullish. Meet Kevin, I think, is still bearish. Dan Niles yesterday, he didn't explicitly say he's bullish, but he tweeted a long tweet, and he was just like, hey, I kind of missed some things that happened, which is why I predicted, we would bottom in September, but based on the data that's happening, I missed out on some of these pieces of data, which was around Israel, Iran, and basically Iran not being as aggressive towards Israel, and unemployment data being weaker and CPI being weaker. So Dan Niles kind of implicitly admitted that, yeah, some of this data I missed kind of hurts my thesis. And so we'll see if he turns fully bullish, but we are getting some people starting to capitulate a lot more. Snowflake is up. They have earnings tomorrow. Yeah, Snowflake's going to be really interesting. We'll see how Snowflake plays out. Oh, S&P's at 560. There you go. S&P's at 560. Snowflake at 133. I do think Snowflake is going to beat and raise because I think although the business long-term is in a pickle, given the competitive dynamics and given their lack of an AI moat, I think their stock has been sold off so dramatically that if there was any quarter, there you go, S&P at 560, where Snowflake beats or where the stock goes up 10%, it would be this quarter. Because like the comps are just like low and the expectations are so low that if the business didn't totally collapse and they produce upwards of 24% growth this quarter, I think the stock does well. I don't have any play going into earnings on Snowflake because at the end of the day, I just, kind of just don't believe in the company. Not sure how things will play out. But on a technical perspective, they should be able to beat pretty easily. And if they do, the street might reward them. They did get some bad downgrades back down to like 150, 160 from Goldman and a couple other firms who used to have their price targets at like 230. But now it's just going to be a question of if they can beat tomorrow on that quarter. So that's what we have right now in the broader S&P. Rocket Lab, where's Rocket Lab? Rocket Lab is at 696. Rocket Lab's still doing good, dude. It was at 736 yesterday, 697, down 3%, still up 30% for the week. Rocket Lab really gaining some momentum. And then Palantir right here at 32.51 on the day. All right, let's listen to Dan Ives and what he has to say about NVIDIA and Palo Alto Networks. Get some thoughts from him. Real quick before we do that, one chart I want to share with you guys, just showcasing the level of demand that NVIDIA has been able to show. So this is, sometimes it takes, it's important to just look at these charts. This is NVIDIA's annual revenue. In fiscal year 2015, they did $4.6 billion. The street is projecting in fiscal year 2025, they're going to do $120 billion. This type of growth in our lifetime has not been seen. I think ever. I mean, put a company in the chat that has done this type of growth. I think Tesla is similar to this, but Tesla, it's not been as sustainable. I think it was a period of a couple of years. This is just magnificent growth. This is almost 40% CAGR over the past 10 years in revenue growth, top line. It's insane. So, when Dan Ives is very bullish, when he says the party is only starting, all this stuff, I think it's because when you look at something like this, you start to realize like this is not slowing down, at least anytime soon. And because it's not, the street will probably reward them accurately for that. All right, here's Dan Ives on Palo Alto and NVIDIA today.
This was a stock that was on a tear really the last couple of weeks. I mean, it had risen about 16, 17%. And a lot of people wanted to know whether we were going to see that justified by the results that we got today. Were they?
I mean, for the bulls, it's a dream quarter because they delivered not just in terms of the quarter, but the outlook. You look at what we see in cybersecurity in terms of Fortinet, Checkpoint, now Palo bodes well for Zscaler. We obviously had the CrowdStrike black eye, but this is a golden age for cybersecurity being led by Palo Alto.
Being led by Palo Alto. So if I'm looking at this as an investor, you think this is the market leader in terms of pure play cybersecurity companies?
Table pounder. It's just a start in terms of where we see this going. Platformization. Nikesh, one of the best CEOs out there. That's why, look, this is a quarter. They should print this out, put it in the Louvre. It's another sort of masterpiece in terms of where I see the Palo Alto story going.
Well, yeah. Is there anything in here that looked somewhat concerning to you? Because there's a lot of players in this space. And we've been talking about consolidation in the cybersecurity sector. And certainly Palo Alto Networks is a buyer right now. But is there anything in here that maybe gives you pause?
I think to some extent, there was some nervousness going in, despite the stock, just nervousness in terms of the overall space. You look at what Nikesh is seeing, especially even off quarter. This for bulls in tech, for bulls in cybersecurity, this is exactly what we want to see. But I do believe consolidation, this is just a drum roll. Get out the popcorn. We're going to have a lot of M&A in cybersecurity. You thought about that Google Wiz deal, which ultimately didn't happen. But this is a start. There'll be an acquirer. But there's going to be many acquirees in terms of where I see in the sector.
What about a company like Microsoft buying more of its own cybersecurity capabilities? Because right now, these are kind of add-on services when you already subscribe to Microsoft's software, right?
Well, especially when look what's happened in the cloud. I think Microsoft, Amazon, Google, they will aggressively potentially look at cybersecurity. And also when you think about the overall FTC con, wherever that heads from an antitrust perspective, potentially more M&A in big tech, stronger and going to get stronger. And if you look at what's happened in cybersecurity, this is really one of the best barometers in terms of what we see in overall IT spend. We'll have Salesforce and some others, but if you're a bull from from an overall tech perspective, this is exactly what you wanted to hear in terms of barometer.
I am curious in terms of the IT spend. I've heard people basically say that a lot of corporations they don't actually want necessarily a bundled cybersecurity product, meaning, if you fold that in with the Microsoft, to them, that makes it less attractive. They want some separation. Are you finding that to be true?
No doubt. I mean, pure plays have won. That's why if you go into a typical server room, you'll see 25 cybersecurity software pieces in there. But look, Palo Alto, what they're essentially doing is platformization. They're trying to benefit more and more. They're just continuing to expand in terms of what they're saying.
Well, that's what I'm curious about, the strategy that the CEO is taking here. Because when I hear that platform, I think, is that kind of sort of like add-on products and services? I mean, what does that look like? What are they trying to turn themselves into?
It's really about the shift to the cloud, because take a step back. More and more data moving to the cloud, AI revolution, that has to be protected. Cybersecurity is going to be a second, third derivative of the AI revolution. So Palo Alto, they continue to play chess while others play checkers. And I think what they're doing is really skating to where this is all going. And look, for this quarter, remember, you go back, they had 2 quarters ago, they had a pretty, soft quarter. This is a huge validation.
My understanding of platformization is that they are integrating a variety of use cases around cybersecurity. So CrowdStrike's the leader in endpoint security. I think Palo Alto wants to be the leader in cloud, endpoint, and a bunch of other use cases. And they're creating that platform to give to their customers, which should increase top-line revenue, increase upsells, and then overall just create a better, more integrated product. And if that approach ends up working, maybe that's why the street's excited today, up about 5% on how this company gets to $15 billion in revenue by 2030.
I was always good at chess, but I sucked at checkers. And I
Really?
never forget. I think it's because I overanalyze everything, which works well in chess. But with checkers, I mean, it's
we should play checkers one day and see.
I want to see you guys play Chinese checkers. Let's just broaden this out to
By the way, I don't know how to play checkers, but I love playing chess.
Overall technology, because earnings season is pretty much over. I know we have these cybersecurity companies, a lot of enterprise software companies, but it feels like we're kind of in a quiet period waiting for NVIDIA next week. Have people made adjustments to their NVIDIA numbers based on what we saw from, say, the Microsoft, say, the Alphabets, and everyone else who, didn't quite live up to expectations with the AI spending?
Yeah, you've seen it, but even when in Microsoft, they guide strong on the Azure growth in terms of second half, you've seen numbers tick up for NVIDIA. But look, it all comes down to hearing from the godfather of AI, Jensen, NVIDIA. I think it's going to be a drop the mic moment. I think another sort of validation for where we see AI spend. And from a tech perspective, you put all these pieces together. Unless you have binoculars or a telescope, hard to find the recession here, especially when it comes to big tech.
Yo, Dan is speaking like a gangster, bro. He said you need binoculars or a telescope to find the recession. That is hilarious, bro.
Yeah, I mean, it kind of sets the tone for the rest of the tech sector. When you talk to your clients, what's the company they ask you most about?
Probably the Messi of AI, Palantir, because that's been one from an
I didn't know he would mention Palantir today. I didn't know.
An AI perspective, I think many viewed it in the background. Now, really front and center in terms of use cases, what we're seeing, I think not just in terms of the quarter, but now we're seeing what's the second derivative in software? Is it ServiceNow, Microsoft, Oracle, and Palantir? I think probably one of the best purest play AI names out there.
It's interesting to look at the companies you cover. By the way, you have a very eclectic mix of companies that you cover. I'm not sure how you're able to convince your bosses of that, but you do a great job. But one thing that I noticed is you seem to be covering a lot of companies that are really kind of on this inflection point in various technologies, whether it's AI or autonomous driving and EVs and things like that here. When you look at where we are, and I'm talking about from an investor perspective, and where you want to be and where we think what the world is going to look like, and more importantly, what the stock market's going to look like and who's going to dominate it here. Do you think we should be looking at the established companies like the NVIDIAs and Microsofts, et cetera, or is there going to be a new crop of companies that comes in and maybe eats their lunch sometime soon?
Well, I think the strong get stronger in terms of big tech, but there are going to be companies that will become household names because you start to think about this is the biggest tech trend, biggest transformation we've seen since the start of the internet, 1995. And when you look at $1 trillion of incremental CapEx, that's why there's names like Palantir. There's some other software names out there that will be the next sort of generation. But when it comes to NVIDIA, Microsoft, big tech, strong get stronger in the AI revolution.
What's the company that gives you most pause right now when you look at big tech?
Look, I think most pause is probably Intel, because that's one, if you looked up disaster in the dictionary, you'd see Intel's ticker. And that's one, despite you call it a value trap, it just shows have and have nots. You got the godfather of AI, Jensen, with his black leather jacket. Then you have Intel, which is just dog ate the homework.
Yeah, they're struggling to find their way right now, certainly.
Struggling would be a compliment.
So what's interesting about this, guys, what's really interesting is that guy that was asking Dan Ives a question, he has not been the friendliest to Palantir. And it's really interesting. I think I found the clip, if I'm not wrong, right here. Let's see if I find the exact moment. But I remember reacting to this video back in August 2023. Let's see if this is the exact moment. I can't promise this is it because I'm trying to find it real quick. But I think this is him talking about Palantir a year ago. Let's see if this is the clip.
And that's fine. It's a legitimate business.
Oh, yes, this is the clip. This is the clip. All right, here we go.
Well, that's what I mean. Who needs that? I mean, we know the government needs that because they want to spy on everyone. But I mean, how many?
Look at that shit, bro. He was talking so much shit when Palantir was like $15. Oh, the government needs to spy on people. That's why commercial entities don't need them. The government needs them. And now he has to sit across from Dan Ives as the stock is $30 freaking, up more than 100% from where it was when he said this. And he has to he can't push back. What are you going to push back? What are you going to say to Dan Ives? You're going to tell Dan Ives they're an evil spy company? Are you going to tell Dan Ives they're an evil spy company like you told this random guy a year ago when you didn't understand? Nope, because Dan Ives is going to laugh in your fucking face if you do that. But this is what the media was doing a year ago.
Data that companies are harnessing.
Okay.
But still, how do you develop products around it that you can scale to, thousands of customers? Their entire customer base is 400 customers.
Well, that's what I mean. Who needs that? I mean, we know the government needs that because they want to spy on everyone. But I mean, how many? I mean, let's just call it what it is. I know we dance around the issue as to what Palantir did. I'm not being facetious at all. This is what they do. Well, and we need to call it that. And that's fine.
It is so weird. He was trying to be like an activist. He was trying to have like this, unique raunchy opinion. We need to call them out because they're spying on us. Like, dude, shut the fuck up, dude. Like, I'm sorry for my French here, but like these people with these uninformed opinions, like he has probably done a lick of research on what Palantir actually does with the government. And now he's like, well, we need to call it out. We need to have a stance. We need to, say that Palantir is this evil company. Stock goes up by 100%. Now you can't say shit. Where's their whole evil spy company take in front of Dan Ives? Well, you don't want to say that. Why? Because Dan Ives is going to be like, why the fuck am I coming on this show with these bozos saying this nonsense about one of the most amazing, unique AI companies that's emerging in the tech sector? Why would I come on the show and be talked to by an idiot? Probably shouldn't do that. And so you're not going to say stupid shit. But this is what happens. Stock goes up. Everyone stops talking shit. That's how it plays out. Anyway, I had to find that dude because I recognized the guy. I was like, wait a second. I did a video reacting to this guy a year ago. I was like, now he's just friendly listening to Dan Ives talk about Palantir. Interesting how things change. Okay, PayPal's up 3%. PayPal is up 3%. Now, why is PayPal up 3%? Again, we talked about this, but this is the reason for why PayPal is up. They have a partnership with Adyen. So this is what Alex Chris tweeted today. We're excited to announce Adyen as PayPal's first fast lane distribution partner. This expanded partnership combines PayPal's brand trust and global scale with Adyen's customer base and relationships with enterprises to help make PayPal available everywhere where customers shop. This strategic partnership demonstrates that PayPal is evolving into a platform of choice by enabling other payment processors to thrive and achieve greater success. So it looks like the collaboration is going to help with the seamless payment flows of shopping experiences from the backend infrastructure Adyen provides on the front end with PayPal. CEO of Adyen says PayPal is a payment brand name that shoppers trust, and we're excited to take our collaboration another step further in the US, utilizing our combined expertise to raise the bar for our customers. And that's why it's up. That's why it's up right now. So there you go. PayPal getting some momentum. 71.77, dude, up 3.4%. Not bad, man. Not bad. We haven't had a 3% day on PayPal in a very long time. In a very, very long time. Arrow says, pay me my money, PayPal. Yeah, dude, it's time for PayPal to show some momentum. Again, fair value on this is closer to 95, in my opinion. Just if you look at a basic DCF, 12% discount rate, and you look at 7% growth over the next 10 years on top line and free cash flow, like it's not crazy to say PayPal is worth 95 to $100. And if you give it any bit of a premium, you're looking closer to 120, 150. But the narrative has been that it's going to be, swiped away by competition. Seems like that might not happen. S&P 500, 560. By the way, Rocket Lab right back up to $7. So down 1.73% today, but still up. S&P 500, 561 almost. Trying to make a run for that all-time high at 565. And when we break that, I think that's very bullish for the broader market, and we start to get more price discovery at a different level. WeChat app that does everything, works internationally, but not sure this will work well in America. Yeah, I think an app like WeChat that's basically China's version of an everything app. I think Twitter wants to be that. I don't know if the American consumer, I mean, let's for those in the chat that are from America, what do you think? Or even if you're in if you were trying to make the WeChat of Germany and you're in Germany right now, like, would you want an app that does everything? Because the Chinese consumer has obviously said, given the growth of WeChat, they like doing everything in one platform, in one or two apps. I think the American consumer is more sort of fragmented. Like, the American consumer wants their own DoorDash app, and then they want their own shopping app. Whereas WeChat, I think you can order food from it. You can buy stuff on it. You can have your messages, and like, it's everything in one thing. I kind of don't know if I would want everything in one thing, although it probably would make life a little bit easier. But yeah, it's one of those things that I don't know if the American consumer would be ready for that. Chris says, no, too much innovation across multiple tech and tools. Hard pass is good for spying on the users. That's another, I mean, dude, if everything's in one app, you would imagine what company owns that one app, right? In America. And in China, we know what government owns that one app. In America, that would be much different. WhatsApp has the best possibility, in my opinion, to get there, but WhatsApp, no one trusts Meta that much for like actual parts of their life. And also, Meta is not, I don't know, Meta's not going to be able to integrate some of the services that we love just because Meta's not, they don't have domain expertise in a lot of those things. But in advertising, they have plenty of domain expertise. Also, you would probably see so many ads in the WhatsApp product that you'd just get annoyed by it at that point. What about an Amazon Fire Stick, Alexa, one app, one device? Yeah, that's fair. And that's integrated in your home, but that's more for content and for like being able to integrate all your preferences for watching TV in one place. Does anyone even use Alexa anymore, dude? Does anyone use Alexa? I haven't used Alexa in years, dude. I think we have like 5 of them in my house, or the Amazon Echoes. Like, my mom bought a bunch of them. I don't use them. Eli Lilly, they got an upgrade today. They're at 964. The reason they're up 5%, I forgot to talk about this, but they got an upgrade from Goldman Sachs, and they have a new drug or not a new drug, but they're showing impacts from one of their drugs, and that's why they got upgraded. Eli Lilly, let me see if I find it right here. They got a pretty big upgrade. I'll see if I can find it, but yeah, that's why. Oh yeah, right here. So Wells Fargo said, put it to $1,000. We think, basically they said, look, Ozempic is going to scale dramatically. That's kind of the core comments they had. And so we said, we think there's going to be a massive moat. We think they're integrating their supply chains around Ozempic, and the supply side of the growth is only increasing. So they have a price target of $1,000. I use Alexa daily, says Matt Money, in my car every day. Chris says I do. Interesting, dude. I never use it. I really don't use it. Like, I use Siri to like schedule a meeting or to set an alarm, but I never use Alexa. I also don't listen to music either. So like, as some people say, Alexa, play like whatever. I don't listen to music throughout the day, like only in the gym. So I've just never been a fan of it. I've never used it. But the point is, I think Amazon is the closest, and WhatsApp is the closest from a consumer perspective to like integrating your whole life into a few set of devices. Honestly, the real winner here is Apple. Apple really has all of our shit in one place, but it's not to the point where Apple's, I'm buying my t-shirts off of Apple, right? Whereas with WeChat, so much of that stuff is integrated. Thank you for the $2 super chat. Go Cubs. You say, what do you think of Netflix new all-time high? Is Netflix at a new all-time high? Wow. 700. No one said that in the chat, huh? No one said that. This goes to show you no one cares that much about Netflix. I mean, like, or at least there's barely any Netflix shareholders in this chat, dude. Wow, that's a big deal, dude. Last time Netflix was 700, Joseph Carlson was buying the top. I remember this. And then this thing went down badly. The reason I remember this is because he was like he's the biggest Netflix bull on YouTube that I know. And to give him credit, he's been bullish on Netflix for like 5 years now. And I remember I watched the video in 2021 where he was buying it at 685. And I was just like, interesting. And then Netflix collapsed, all the way down to 100, and Bill Ackman sold out of it. But to Joseph Carlson's credit, look at this decline, dude. It went from 700 to 162. And this collapse right here is when Bill Ackman sold. He bought it at 330, then he sold it at 162, bought Google. But Carlson has been bullish on Netflix for a very long time, and he's been rewarded for that. So what do I think of this at a $300 billion market cap? I personally think it's overvalued. I don't like it at 700. I've never understood the Netflix business model from a shareholder perspective that much. Now, granted, the thing I've come around on this is that they're the only profitable streamer, which will give them a premium. and they have the best content out of Hulu, HBO, etc. Not literally the best content, but because they have their own content studio, they're able to pump out more content, and it ends up being better many times than the competitors, which is why they have a definitive moat. Now, do I want to pay $300 billion for Netflix? No. I'm just like, there's just no way I'm doing that. I don't even think it's a tech company. It's a media company. There's technology involved, but at the end of the day, their COGS and their balance sheet reflects a traditional media company. But they're going to get a premium because they're the best one out there in regards to streaming. So I am not a shareholder of Netflix, but if you are a shareholder, it's great. Buying at 700, I don't know, dude. Like Netflix has to show another growth initiative outside of subscriber growth that gets you excited, like theme parks or something, which they're experimenting with, but it's not a big part of the business. Games, I don't know if games have been good on Netflix, but does anyone really go to Netflix to play video games, bro? Like, is anyone really leaving Fortnite or Call of Duty to go play some Netflix games? Like, so I think it's a top line media business that has to grow. And it's just a question of how far it grows. But I'm happy for Netflix shareholders. Look, you deserve it. It went through hell in 2021. I mean, Netflix was one of the premier stocks that went down almost 85%. And it came right back from the dead as they continue to grow. Where do we think Intel is heading? So Steve is very bullish on Intel. We talked about this on the Friday market close. He thinks Intel is going to take market share from AMD on the upcoming upgrade cycle for personal computing. And he believes the x86 chip is going to outperform the Ryzen chips. I don't know if he's going to be right on that, but I think you got to believe that. Like, you got to believe that x86 is going to be the thing that ends up winning, or like that Intel's infrastructure and their CPUs win over the long term. The foundry business, I think, is a call option. No one knows if that's going to work or not, and that's going to take 4 or 5 years to see if it's even profitable. So it's trading below tangible book value. So is it cheap? Theoretically, yes, but the future growth really has to be factored in to see if Intel has a decent amount of momentum. Is PayPal still going up? Are we still going up on PayPal? Wow, PayPal 4%. Holy crap, dude. Not bad in the context of PayPal. Someone says Netflix has games. Yes, they do. Dude, even YouTube has games now. YouTube has games too, which like, I didn't even click on it, dude. I'm like, dude, I'm not like, this is what I mean, right? Are consumers really going to be in one app? Like YouTube trying to make me play a video game? It's like, dude, like, no, like we're not, I'm not doing that. So Netflix trying to play a bit, like, no, dude. The only reason I'm using Netflix right now is to watch Prison Break, which, by the way, I said season 4 yesterday was trash. I'm getting into the middle of season 4. Not that trash anymore. It's actually kind of good. First 10 episodes, a little rough to get through, but I think episode 12 takes a massive twist, and I didn't expect it, even though I'm the worst person to not see a twist coming. Like, whenever I watch a show with my friends, they're like, how did you not know that was going to happen? I was like, yo, dude, but he turned out to be the bad guy. They're like, dude, we knew that. Like, that was obvious. I was like, okay, it wasn't obvious to me. So I'm not good at reading who the bad guy or good guy is. But it did twist. So now I'm more excited for Prison Break. Okay, let's see how Lowe's did. Lowe's had earnings today. This is a big company in the consumer space. They're flat on they're up 1%. They were down a little bit in the pre-market. Here's what Lowe's said about what's going on with their earnings.
Lowe's reported earlier mixed second quarter results. Melissa Repko spoke with the company's CEO and joins us now. Good morning.
Good morning. Investors are weighing the latest clues from retailers this morning, and they came from Lowe's, which reported earnings and its revenue coming in short of Wall Street's expectations. It warned sales will be weaker than expected in the back half of the year. For the full year, the company said it now expects total sales of between $82.7 billion to $83.2 billion. It expects same-store sales to fall by between 3.5% to 4%. I spoke to CEO Marvin Ellison, who told me that consumers are waiting for the Federal Reserve to make a move. And he added they're under pressure from the economic backdrop. He said inflation remains high and big ticket purchases are being delayed as customers sit back and wait for interest rates to fall. He said they have not seen a dramatic shift one way or another in overall consumer sentiment, however. About 90% of the company's customers are homeowners.
That's bullish. I'm going to replay that again. They said, hey, consumer sentiment is okay.
Seen a dramatic shift one way interest rates to fall. He said they have not seen a dramatic shift one way or another in overall consumer sentiment, however. About 90% of the company's customers are homeowners, and most have fixed rate mortgages of less than 4%. So that explains some of the hesitance, he said. His comments echo home.
So that's what you have in Lowe's. The only reason Lowe's beat or missed on their earnings right here, they missed a little bit on revenue and they beat a little bit on EPS, is because most of their buyers, their customers are home buyers, and obviously the housing market has taken a little bit of a dive. The CEO says the company delivered strong operating performance and improved customer service despite a challenging macroeconomic backdrop. At the same time, we continue to build momentum with our total home strategy. As we look ahead, we are confident that we are making the right long-term investments to make sure that when the market recovers, we would like to extend our appreciation to our dedicated frontline associates. As the housing market gets higher, and we saw 16% of home purchase agreements went belly up in July, you would imagine Lowe's and Home Depot starts to get more momentum. But even with the consumer that is primarily for Lowe's a home buyer or someone who's refurnishing their home, not buying as much because home sales are down, the CEO says, yeah, we think consumer sentiment is fine. Again, the exact quote, it's not like we've seen a dramatic shift one way or another in overall consumer sentiment. This really makes me respect the Lowe's CEO because he could have easily been like, hey, housing market sucks. Consumer already sucks. Let me lean into the fact that the consumer's struggling. But instead, he's like, actually, no, the consumer's fine. Like, this is just like, as soon as J-Powell cuts rates, we know that people are going to buy homes. And I think he's actually setting up the street to help the stock over the next 6 months because the street's kind of expecting this as a macro tailwind. So he's kind of being strategic here. And overall, we're seeing more insights that the consumer is not really struggling as much as Disney would tell you that it's struggling because people aren't going to the Disney park anymore. PayPal, by the way, at 72.26 right now. So Lowe's up 1% after a miss on earnings, which means the street is confident that the future growth will come, or at least get back to normal when rates end up getting cut. And so hopefully that will be important. Chris says home inventory increases, prices decline. Yeah, and that's a really good thing, right? As home inventory increases, prices start to decline, more people start to buy a home, or at least it becomes more competitive. And that also allows, hopefully, more people to go to Lowe's and Home Depot to buy a little bit more. Chris says, I agree with this, but it won't boom until the rate cutting cycle is done. Well, that's a really interesting thing, right? That's a really, because like when rates come down by 25 bips or 50 bips or 75 bips by the end of the year, will that be enough to get mortgage rates to go from 6 to 5%, which I don't know if it would decrease by 1% over the next couple months. Maybe it's going to take, 6 to 10 months to really start to see it come down. And even if it does come down, let's just say it comes down to 5%. Let's say it comes down to 4.5% with mortgage rates. Is that going to increase dramatic activity in the housing sector? S&P 500 just going flat on the day it was up. Now we're seeing a little bit of a sell-off right here. And if it isn't, then you're not going to see the massive boom in the housing sector from the supply side or the demand side on proxies like Home Depot and Lowe's. But if it does, and Lowe's, in Q1 2025, they blow it out the water because they're just like, hey, everyone's shopping because everyone's buying a home, then that could be a massive tailwind. That might even be a stock to think of owning next year, just from a broader perspective in terms of the recovery in the housing sector. Maybe not Lowe's specifically, but housing in general might be a place that's a little bit more interesting. So we'll see, but at least that's how the market is particularly thinking about it. 30-year fixed year is already at 6.5. Yeah. And so that is going to have to come down decently. And it's just going to be a question of if rate cuts actually get it to start to come down. Let's get an update from CNBC, and then we'll keep going from there on what's going on currently in the markets.
Stocks were building on the rally that we've seen now 9 days in a row. S&P up 0.2%. The NASDAQ also is leading here, up 0.25%. Dow's lagging, down 38 points. What's taking us higher? Well, healthcare is up 0.75% as a group right now. Eli Lilly, a big part of that story. You just heard from the CEO. Stocks up 4.7%. Communication services rallying, consumer discretionary, technology, utilities, and materials. Those are all your green sectors. Energy, real estate, and financials are lagging today. Take a look at treasuries right now, where we've seen this continued rally happening again today. The 10-year yield 3.8%, the 2-year yield just above 4%. Expectation the Fed cuts in September in a few weeks. We're 30 minutes here into the trading session. Here are 3 big movers we're watching, starting with Palo Alto Networks, rising after reporting strong earnings and an optimistic outlook following strong demand for cybersecurity products. Stock up almost 7%. Paramount shares are moving lower in reaction to Edgar Bronfman's bid for the company, submitting a roughly $4.3 billion bid to acquire National Amusements. The saga not over there. And then Edward Jones initiating coverage on AMD with a buy rating, forecasting above average growth for the chip maker ahead, adding that they believe their, quote, optimism is not fully reflected in the share price.
For those seeing the market drop, this is basically what happens at 10 a.m. almost every day. So we're seeing Palantir now at 32. We're seeing the S&P go down, everything go red. Kind of happens intraday, and we'll see how it takes off later in the day. The one thing is today we might see a little bit more selling just because yesterday was a green day. People take profits. But in general, around this time, you tend to see the market fall down a little bit.
Follows a rally that we're seeing. AMD actually is rallying. NVIDIA is a touch weaker today. But Carl, in the absence of a lot of big economic data here in the U.S., folks are talking about some of the economic data abroad because we did get European inflation numbers I just wanted to hit that were a little bit hotter than expected. Not necessarily direction that Europe wants to see them go in, and also speaks to the price pressures that persist, especially in services, wages in the Eurozone. So there's the 2.9% core. That was the same as the month before. And then 2.6 overall inflation was a little bit of a tick up. Now, ECB President Lagarde has said she's going to look holistically at the trend of inflation. Remember, they've already begun the rate cutting cycle, but then they paused. So this doesn't give them a whole lot of room to just go on a normal easing cycle. It also adds fuel to this euro dollar trade. So the euro is now at an 8-month high, 9-month high around there against the US dollar, because the bets are now the Fed is in more prime position to cut because our inflation has been looking more benign. So that's something just feeding into the narrative today.
Been a nice little run here for the pound.
And again, most of the banks, European Central Bank, UK, they've all cut already. So the idea that we don't get a September cut, I mean, some people were saying yesterday, no, the cut's still not going to happen. I don't know, dude. It's going to be really hard to imagine a cut not happening.
DXY 7-month low. At least Canada CPI came in line.
Yes, Canada was better, actually. And so they've been cutting rates as well. So I'm glad you brought that up. We have that number too. And it shows that, globally, we're on a more disinflationary trend. The Riksbank in Sweden cut rates, if you're keeping track of all the rate cutters. But there was the Canada 2.5% inflation rate, and that was a little bit better than expected. So more good news on the global front. As far as in the U.S., we're still having this conversation of will we, won't we go into recession, or how much are we going to slump in the economy now that we've seen some weakness, for instance, in jobs. And I just wanted to highlight a few charts that stood out to me on this conversation. So New York Fed did a survey of workers and actually found a significant percentage tick up in those expecting to be laid off from work. So this comes out of the New York Fed, and there's the chart. And look, we're at the highest level from where we've been, and I think that speaks to the sentiment. It's not necessarily what's happening on the ground, but it does represent a change, and people are worried about layoffs. So the number rose to 4.4% on average, up from 3.9% a year earlier, and now it's the highest data actually that we've seen in this series going back to 2014. So that's worth watching. We know the Fed's watching it too. It's always hard to figure out whether unemployment is lagging or leading, as an indicator of the overall economy. But as far as sentiment, that's where it stands. On the other hand, Bank of America put out a great jobs report today showing that the number of job openings to availability is actually still above 1%.
This makes sense because the JOLTS went up last month. So this actually makes a lot of sense.
There's the job openings per unemployed person. And you can see the gray bars over sort of in the early part of the chart of the recessions. And the periods that preceded recessions showed much lower job openings. The point is, if you're still rooting, and thinking that we're going to get a soft landing, and still, especially on.
That's an interesting chart, dude. Look at this. So the gray lines are the recession, and you're seeing job openings go down. Look at where the blue line is right here above the orange line. You're seeing job openings go up a bit. So, and again, the JOLTS report, which I was so confused about 3 weeks ago when it was like, we have way more jobs than expected. I was like, wait a second, isn't the labor market going down? So if you do have more jobs available for those that are unemployed, even though people are losing their jobs more than what they were last year, which is why unemployment is going up, maybe with a rate cut that re-stimulates a lot of parts of the economy to hire more people, and you kind of nail that soft landing.
The gray bars over sort of in the early part of the chart of the recession, Stanley showing less recessionary fears. She looks at the credit market, right? You start to see credit spreads widening when there are economic fears. Here's investment grade credit and high yield credit in the two colors. And we've seen a little bit, you see a little bit tick up there because of the volatility we've had in the market, but nowhere near worrisome levels that we have seen, especially preceding recession or any kind of real economic tumult or worry.
Did you see how many S&P 500 companies mentioned recession on their Q2 calls?
probably not many.
28.
Yeah, very
28.
few. That's another.
It's
There you
lowest
go.
in 3 years.
And also, if you look at some of the polls and surveys from investors, Bank of America, Fund Manager Survey, I mean, very high numbers expecting soft landing, not recession. That doesn't always happen, but no, it's good to see from CEOs as well. Plus, there's plenty of corporate issuance. You know, you're not seeing that dry up in the market as well. So as we are looking for all the signs, as we await some bigger data releases, we'll get minutes from the last Fed meeting.
I mean, look, that's just more pieces of data in regards to companies talking about unemployment. I mean, that's true. She's right about that. I've heard more companies talk about the consumer. Netflix still at 702 right now. Then I've heard them talk about unemployment or layoffs. And, you know, maybe that changes in the next couple quarters if they do more layoffs. But if they don't, then I don't know, dude. We're not getting a lot of that's something I actually didn't think about. We're so concerned about unemployment. We are hearing almost zero companies. I mean, he mentioned 28 out of 500 companies that actually talked about layoffs. And some of those companies were doing layoffs, which is why they talked about it. But the majority of them really aren't that concerned about it. They're more concerned with the consumer. And if the consumer, as Lowe said today, is actually not struggling, it's just there's certain macro dynamics that they can't control, like the interest rates on housing. Then as that comes down, that should be able to help. I think the biggest thing over the past couple of weeks, Palantir right here at 32 right now on the dot, is that we've been able to really make a dent in inflation under 3%. Canada at 2.5 versus 2.7 expected. Like, it really does feel that the big thing that Jay Powell warned us against in Jackson Hole 2 years ago, which was inflation, we've been able to combat that pretty effectively. And the fear is not now is inflation going to reaccelerate. The fear is, will unemployment dramatically go up? And the idea that most of the bulls are betting on is that the rate cut pretty much stops that from happening. Even though it happens a little bit, it's not the end all be all for the broader market. The job postings are BS. I kind of agree with that to an extent. I think we'll know for sure tomorrow. So tomorrow's a big day as well. I actually don't know when the BLS survey comes out or the revision. I think it comes out at 10 a.m. It might come out at 8:30 though. But they're going to put out a revision and we're going to see how many jobs we lost. Oh, 10 a.m. We get it. So 10 a.m. we will get the BLS survey, or not the survey, but the downward revision establishment data. And either we're going to see us lose 1 million jobs and the market doesn't care. Or we lose, a couple 100,000 jobs and the market sells off, or we lose more than 1 million jobs and the market sells off. Like, again, I think there's two elements to this. I think we lose a ton of jobs, market sells off, or we lose a ton of jobs because we're definitely losing a ton of jobs. There's no way I think we're not losing a ton of jobs. I don't know if it's 1 million jobs or we're losing jobs, or the market doesn't care because they're like, hey, earnings growth is so good, the consumer is so good, the Japan carry-in trade is gone, we're getting rate cuts that we don't really care that we lost that many jobs because it's not going to dramatically increase or decrease the health of the consumer because people still have enough jobs. So tomorrow will be interesting. If it's a general red day tomorrow, like everything's just red to be red, that news is not going to help. But I don't know if that starts the decline of going back to the bottom on a lot of these names, because I don't know if that data is enough to really put a dent in the broader thesis around rate cuts. So tomorrow 10 a.m. will be big, and we'll see how the market reacts to that. Google at 169 right now. HIMS is down 1.6%. Robinhood $20.10. Palantir still maintaining 32. So although it's in the low 32s, down 1.2%. It is still 32. Again, I feel so greedy as a Palantir shareholder every day asking for more, but now we just got to see if it can keep going. Now, one thing I did say yesterday that I just want to reiterate, I did this on the market close. Karp has been consistently making this point about chips and ontology, right? We saw that entire interview where he goes deep into chips and ontology with Yahoo Finance, and he said these are the things that are going to matter. I believe that if the chips part of AI has played out, or at least is playing out, but like the 5,000x return has been achieved by people who have bet on NVIDIA early, which was the chips part of it. The ontology part has yet to be achieved. Why does that matter? Again, at the end of the day, ontology is what makes an LLM useful in a business. The chips are what makes the LLM even possible because the chips train the large language models. So, when Dan Ives says, hey, I'm talking to all these Palantir customers and they're saying the use cases of connecting their LLMs to the ontology, Foundry and AIP is what makes their business more valuable, which is why they're willing to pay more money to Palantir. That's where you get the value of an ontology. And the media coverage that Palantir is getting, I think is going to compound people caring about what an ontology is, because I didn't know about what a GPU was really until late last year, early this year. I mean, just to be honest, people in the chat maybe have known about it for 5. I just figured out what a GPU really is. And I still probably can't fully explain it. So I think a lot of people have no idea what an ontology is. They're going to see the value of it for enterprises, which is going to translate into the growth of Palantir. Palantir has to put up the growth to be able to get people to care, just like NVIDIA put up the growth to get people to care about GPUs. But when that happens, chips and ontology might be the thesis on how to play AI, chips being hardware, ontology being software. And that might be very important for Palantir. Here's Karps talking about LLMs as well at AIPCon a month ago.
Why has the whole world misunderstood where LLMs are valuable and where they're not valuable? And basically, why is everyone trying to sell you something that is like kind of the equivalent of talking to a reasonably smart person who entered high school, which is interesting, but is not going to allow you to change your business? And why have they not understood that you should build something that would allow you to work with this interpretive, generative thing called a large language model, but in a way where you can actually impose the knowledge from it, the logic of your business, the understanding of your business inside the architecture of a modern enterprise? Every modern enterprise in the world has an architecture.
And every modern enterprise in the world, is Palantir's belief, is going to need that architecture to provide value. It's really just that simple. The ontology is what unlocks that value. The LLMs help operationalize the ontology. And if the use case of AI, which by the way, I think everyone who's bullish on AI, even if you're not bullish on Palantir, you better be bullish that someone figures out the use case for AI. Because if we wake up 5 years from now and these LLMs have zero value, like they're not unlocking anything that's important, there is no AI internet revolution. Like it's just not real. It's just not a thing. It was just like fantasy we all bought into, and we're going to have a massive bubble burst. So even if you're not bullish on Palantir, dude, or you don't like Palantir, you've got to be bullish that some company, I'm hoping it's Palantir, unlocks most of that value for the enterprise, because most of the money, again, is outside of Apple with their consumer version of AI, which I don't even know how they're going to monetize AI on the iPhone outside of just charging for the iPhone itself. Most of the money is in the enterprise. Most of the money is with Toyota and BP and with Chevron and with FedEx. They're the ones who are going to be paying hundreds of millions of dollars over the next 10 years to operationalize their business via AI. And for that reason, there needs to be a use case. So I think if Palantir unlocks the use case, that is going to be their moat. And that's what the market is going to be excited for as well. Now, Palantir has not had a sell-off in like since August 5th. So we're at 31.91 right now, down 1.82%. Do I think we can get back down to 27? Yeah, I think it's possible. I just think there's so many dip buyers, lows up 0.5%, that are ready to buy, that if this thing goes to 29, people are going to think that's an opportunity. 28, it becomes an opportunity. Even 30, it becomes an opportunity now, falling from 32. The opposite could happen too. People could be like, oh, it's falling. It was always overpriced. Now it's finally getting back to normal. That psychology could take place. But the other type of psychology could be like, hey, this is the dip. I got to get in, especially if we're in a bull market. By the way, ASTS down 15% on the day. So they're falling as well. So I think both of those could play out, but we're going to have to see over the next coming weeks how the market kind of interprets it. Palo Alto up 7.5% on a red 1030 on the day. Like today, it's about to be 1030 and we are going red. Palo Alto still green, 7.5%. Bitcoin is also down. Surprise, surprise. Bitcoin falling below 60,000. NASDAQ's down a little bit. Again, I think Bitcoin needs that rate cut. That's going to help liquidity for that. NVIDIA 127, which is still up 40%, even if it's not at 130. So NVIDIA still doing well. TSM 171, Google 167, Coinbase 197, DraftKings 34. Yeah, the entire market taking a little bit of a breather, which is fair. Let's see, maybe throughout the rest of the day, S&P can do a little bit of a U-turn and we get the 9th green day in a row. But if that doesn't happen, then 8 days is not too bad either. All right. Not bad, folks. I think that's it for the show today. I'm actually going to have to leave a little early because I have a meeting at 11 a.m. and I got to get ready for that meeting. It's a cool meeting. You guys will see the impact of that meeting in a few months, but I got to get into that meeting. I did want to show something before we get into the word of the day. And then I'll be back at 3:45. Technical Tuesday today. Jason will be on with me. We'll have it'll be a very long market close. So even though it's a shorter market open, we'll be live for like 3 hours. And so any ticker you want, we'll be looking at all the technicals of that ticker. So just be ready with those tickers. I got to show you guys something because my sister brought this home last night. And quite frankly, I was disgusted. She came home from Costco. I took a picture of this just to show you. She said, why are you taking a picture? I said, because I need to show the live stream so that they know how disgusting this is. And I have to show this. This is what she brought into our house yesterday, okay? Do you guys see this? Do you guys see this? This is a shrimp salad smothered, not covered, smothered in mayonnaise. She paid $11.09 for this garbage and brought it into the house. And so she's unloading the grocery, and I see this on the table, and I was just looking, I'm like, what is this? And she's like, it's a shrimp salad. I was like, this is a shrimp salad with mayonnaise. She's like, yeah, I like mayonnaise. I was like, this is like, leave. Like, don't ever bring this in the house. Like, I almost threw up looking at this, dude. I almost threw up. You guys saying yum in the chat? Dude, something's wrong with you. Do you see this? Like, I legit I had to take the picture and then just leave. Like, it's unbelievable she does this. And she knows sometimes I eat her food. So maybe she's just buying stuff with mayonnaise so I don't eat it, because I definitely eat her food so many times. So maybe this is her new tactic to get me to not eat her food, dude. Like, I told you guys the story. She was at a diner the other day and she brought home like a shrimp salad, and she's like, oh, I have some shrimp in the fridge. And I was excited to eat it. And I opened it and it was just Chipotle mayo covered over the shrimp. And I legit, like, I almost gagged. I was like, no, I can't even touch this, dude. I can't touch. My mom, I didn't tell you guys, my mom the other day, she brought a sandwich from some store. She had half of it left. And I was hungry, dude. I hadn't eaten all day. She's like, oh, I have half a sandwich. I opened up the sandwich. It was a good looking sandwich, dude. I just opened up the bread and I saw the mayo and I was like, I can't do it. And my mom was like, why? Like, my mom was like, I was like, I can't do it. My mom was like, you're really not. I was like, I can't do it. I cannot do it. And I did not eat I didn't eat the sandwich. So it is what it is, dude. I'm not joking around this. I cannot believe there was a shrimp salad covered in mayo, smothered in mayo in my house yesterday. But it took place and I just had to show you guys. For any of you guys saying yum in the chat, you guys, look, I love shrimp. I coconut shrimp, fried shrimp. I love shrimp. I adore shrimp. Shrimp is one of my favorite foods. It's probably top 5 for me. Covered in mayo, shrimp is like the most disgusting food on the planet. I don't understand how anyone can think that's reasonable. Word of the day is endemic.
Endemic.
Natural to or characteristic of a specific people or place. The koala is endemic to Australia, found nowhere else in the world. The genetic trait is endemic to the local population, passed down through generations. So am I basically endemic to comedy? Because that's like a natural thing, right? Natural characteristic. Yeah. So I would say I'm endemic to comedy. Because obviously, I mean, do I need to explain why? I probably don't need to explain why, but you know. It is what it is. No, I'm just kidding. But anyway, this shrimp salad, dude, I'm still pissed off about this. I still can't. I think we still have it downstairs, dude. I don't even want to be close to this. I don't even want to be 5 feet away from this. This is absolutely disgusting. So for those that eat a shrimp salad today, because I got this into your subconscious, just don't put mayo on it. And if you do put mayo, please don't come to the chat and tell me that you had a shrimp salad with mayo, because I don't want to see it. And you know, the ironic thing is, I told you guys this. I used to eat mayo sandwiches when I was little. I used to eat mayo sandwiches. Chris says I'm endemic to brick paper walls. Goodness gracious. Palantir endemic. Yes. I used to eat mayo sandwiches, dude. I would take 2 pieces of bread. I would put mayo on it and I would eat it as a sandwich. And now when I think of myself doing that, when I was like 10 years old, I'm a different person, dude. I couldn't imagine I did that. I couldn't imagine that I did that. So 100 gifted subs for you to now eat them. Dude, you could give me $1 million freaking dollars. I would not do that, dude. $1 million. You could give me $5 million. I wouldn't do it. I wouldn't do it. I'm serious, dude. Like, if 5 million is not worth it, maybe I could get through it, but it would be tough, dude. It would be tough. Now, if you give me $1 billion, maybe I really start thinking about it, but still, it's a tough thing to do. Do you like tartar sauce? No, I don't like any sauces. Barbecue is the only sauce. That's it. All right, that's it for me. We'll be back at 3:45. We'll have some earnings after the bell. Nothing too crazy. Lowe's was the big one for today. Besides Lowe's, what do we have? Yeah, nothing's after the close today, so no earnings. We'll get right into Technical Tuesday. Bring your tickers. Jason will bring his technical TA skills, and we'll go through every single ticker that we need to go through and keep going from there. All right, that's it for me. Thank you, everybody, for being here. Someone said, who hurt you, Amit? What? Who hurt you with mayo? I don't know, dude. One day I woke up and I just realized I cannot do it. I just can't do it at all. Eggs and vinegar are the essentially main ingredients of mayo. Do you like eggs? No, I had eggs yesterday. I love eggs. But when you take the main ingredients out of it and turn it into this white substance that is smothered over products like shrimp, I don't know, dude. Like, it's not it. It's not it for me. All right, that's it. See you guys at 3:45. Thanks for being here. Let's crush it on Tuesday. I'll see you guys in a few hours. Bye, everyone.